Hey guys, welcome back to the channel. Hope you guys are having a great day. It's January 13th, 2021. History was made today. For the first time in history, we have a sitting president get impeached twice. Now, if somebody told you 5, 10 years ago, hey man, Donald Trump's gonna be president one day, you're probably looking at him like, you're nuts. But then again, if somebody comes back to you and say, he will not only be president, but he will be impeached twice. And you're like, dude, we need to lock this guy up in a mental institution because that's insane. Well, yet, we live in insane times. So yeah, Donald Trump got impeached twice. In the grand scheme of things, what does this mean for the markets? Absolutely nothing. The markets are still going to continue to grind higher with the support of the Fed, of course, and all the easy money. So, yeah, this is a big nothing burger. Mitch McConnell did come out today, and he did say that he's not going to bring the Senate back in session, and even if he did, it's not going to be enough time to convict him. So it'll be up to new Senate leader Chuck Schumer to move forward with the articles of impeachment in the next week or two. So we'll see. Again, it all comes down to, can they get about 16 Republican senators to flip sides? I mean, Donald Trump has some enemies in the Senate, so yeah, but are they 16 Republicans willing to put their careers on the line to basically stick a knife in Trump so he won't be able to run again as president? We'll see. But I don't think anything's going to happen unless McConnell gives the okay to say, hey, we're moving forward with this, and I want you guys to vote and impeach Donald Trump. But, we'll see. McConnell at this point, he already won re-election. He'll be there for another 6 years. He don't really have much to lose or gain from this, and I doubt he's going to run for re-election after this term anyway. So, McConnell's sitting on house money. He don't really care what the hell happens. All is well. But I'll keep you posted on the developments. But now let's switch over to the markets. So the markets was pretty uneventful today. The S&P was basically flat. You had the Dow up 60 points, the NASDAQ up 36, and oh no, this is not the right stats. That's from yesterday. Sorry. So again, still uneventful. The S&P 500 was up 8 points. The Dow was down -8. Then you had the NASDAQ, which is the big leader today, up 56. And then you had the Russell, the big loser, -16. So 0.75% down. That seems to be more profit taken, more so than anything. Again, the Russell has been on a crazy tear. And again, my overall thesis is the markets are still going to grind higher. Will there be a pullback eventually? Probably a big scary one. There might be a 10-15% correction, and everybody's going to be like, it's the end of the world. But it's not. It'll be fine. In my opinion, I will buy that dip. And, for all the folks that bought Bitcoin when it was down 20%, down at the lows, 31,000, hey, Bitcoin is back to 37,000. What a time to be alive. So, again, I feel like Bitcoin's going higher and a lot higher, but, you invest with what you feel comfortable with. Not everybody's comfortable with cryptocurrencies, but if you are invested in cryptocurrencies, just know, expect volatility because it's coming. Today we saw the bond yields actually got bid lower. There was a big reversal. We had the 10-year yield at the highs of almost like 1.19, almost 1.2, and it dropped all the way down to about 1.9. So big reversal. We'll keep an eye on that if that's going to be the overarching trend. or if the trend is going to continue upward, or is there going to be a reversal in that trend? But yeah, I'll keep you posted. I mean, the 10-year yield is very important. Again, a lot of a lot of assets are priced off of that 10-year yield. I mean, mortgages, things like that, are all derived from that 10-year yield. So it's a very important indicator. Usually if the rates start going up, some say that's a sign of a good economy, which is true in theory. But when that 10-year yield goes up too high and you have a lot of debt in the system, that can break things. So it's going to hamper people's ability to borrow and refinance their debt at a cheaper rate. So we'll keep an eye on that 10-year yield. We got some CPI data today. Consumer prices went up. Shocker. Yeah, when you print trillions of dollars, what did you think was going to happen? Yes, I mean, the Fed, when they do their QE, is mostly really inflating financial assets, but eventually it's going to leak over to the real economy. So yeah, the consumer prices were high, and are probably going to go higher. We still have the age-old debate, inflation versus deflation. I'm kind of curious what you guys think. Are we headed towards a inflationary cycle, or are we headed towards a deflationary cycle? Because you can make an argument for both. I mean, usually a big economic shock like this, I mean, yeah, it's deflation all the way. But if you got the central banks trying to plug up every hole, and then you got fiscal authorities trying to plug up every hole, yeah, I mean, you can plug up the holes, but it's still early in the game. I'm leaning more towards there's going to be more inflation because the fiscal authorities are going to inject that money directly into people's pockets, bank accounts. So that's something to look out for. We also got a whiff of Joe Biden's economic plan. They're saying that it's going to probably start somewhere between 1.3 trillion as far as the next stimulus bill, and they're going to also work on an infrastructure bill. So the 1.3 trillion, what does that mean for the markets in Wall Street? That basically means you get $1 billion, you get $1 billion, you get $1 billion. It's going to be a massive waste, a massive giveaway to corporations and big business. Yeah, the average person might get a $1,200 check or $2,000, whatever the number is. But the overall majority of that money is going to big business and big corporations. So yes, they're loving it. Wall Street is going to love every penny of it. And that's pretty much it for today's recap. Let me guys know down in the comments, are you part of the inflation camp or the deflation camp? And also, I'd like to hear what do you guys think about impeachment part 2? Does it really matter? In my opinion, it really doesn't. But I'd love to hear what you guys think. Definitely like and subscribe, and I'll talk to you guys tomorrow. Thanks.